Italian American Retirement Advisor with the Gradient Investments Weekly Market Update for the week ending February 12th, 2024. To get into the weekend review, the S&P 500 hit record high last week as it closed above 5,000 for the first time ever. The S&P 500 is up 5.4% to start the year. Growth stocks continue to lead the market, led by large cap names like year-to-date up 9.4% by NVIDIA, Meta. So it's been doing really good, but we're seeing a little bit of pullback now. But highly anticipated inflation data, the CPI, was just reported yesterday, and unfortunately, it was a lot hotter than it anticipated, so it took away some of the gains. We'll get into that again next week, but you're seeing that's what happened yesterday with the market. So look at the market outlook. The S&P 500 setting new record highs, and the earnings forecast for 2024 moving higher. The valuation on the S&P 500 is becoming extended. It's trading at 2 times price to earnings, which is worth monitoring, and encourage signs as markets for the GDP growth rate for the full year is creeping higher than the Atlantic Fed estimate for the first quarter 2024 is 3.4, which is higher than the estimates. So let's talk about the recent activity with Gradient of G50. We rebalanced and made several position changes. A few of them included adding McDonald's and Procter & Gamble and selling off Comcast and UPS. That's what Gradient does. They rebalance every quarter to make sure that we're supposed to be. Stocks in the news, there were several companies held in Gradient investment portfolios that reported earnings last week, including Chipotle, which is a core selected G33 holding, which is up 15% year over year with revenue growth and 26% year over year in earnings. And this was higher than expectations. Intercontinental Exchange, which is a G50 holding, reported 10% increase year over year on 2023 revenue results, reaching $8 billion. So you see a lot of people saying, what's happening with the market? Are we going to keep going higher? Well, the earnings are still really, really strong for a lot of these companies. The other thing about it is, the market last year priced some rate cuts in. So that's why it was going up and up and up. They thought the rates were going to start coming down this year. But with that hot inflation number at 3.1, and everybody didn't think it was going to be that high, the Fed's not going to lower rates as a result of that, because then what's that going to do? It's going to increase inflation because of people with the lower interest rates, more spending, and they're trying to cool the economy. So that's why it did a pullback yesterday. That's why we saw it was over 500 points down on the Dow. Starting to see a little bit of a rebound today, but not much. But still, the earnings are really strong. We're still seeing a pretty strong market right now, pretty strong economy. I think we're going to have a good year this year. But that's it. So that's it for today's market summary. By the way, if you happen to come to our Metamora office, you're going to see some construction. We're redoing the whole lobby area. So that's going to be exciting, a little bit of a nicer look when you come in. But that's what's going on right now. So thank you so much for being part of the ARA family. If you'd like to get a hold of us, you know how to reach us, 855-756-5700. Visit us at aradvisorsinc.com. Make sure you share our website. We got that QR code for our newsletter, so make sure you're getting that. God bless you. We'll see you again next week.